The royalty business isn't an easy one. First, you risk millions of dollars acquiring a royalty for an asset whose production profile is usually a few years away at the best of times. Then, once in production, your earnings are beholden to the ability of other management teams to execute on production plans in a way that keeps your own business afloat for years to come, all while attempting to pay off the debt on your books that exists from obtaining the royalties, while trying to obtain more royalties. Not to mention the other royalty providers you're competing with while trying to squeeze out a profit. It's a story Osisko Gold Royalties knows all too well, as their latest financial results demonstrate. All right, guys, we're talking Osisko, we're talking earnings. Let's dive in. Osisko Gold Royalties managed to post record revenue in 2024, despite a sizable production shortfall when compared to last year. Revenue for the year came in at $191 million, a 4% increase over the $183 million in revenue recorded for 2023. The boost here obviously comes from the average realized price of metals, with gold averaging $23.61 per ounce versus $19.43 per ounce last year, while silver prices averaged $28.28 an ounce versus $23.27 in 2023. Gross profits in 2024 across both royalties and streams totaled $152 million, an 18% improvement versus the $129 million recorded in 2023. Net earnings for the year totaled $16 million, or 9 cents per share, versus a net loss recorded in 2023 of $37 million, or 20 cents per share. Adjusted earnings improved from $74 million or 40 cents per share to $97 million or 52 cents per share. Operating cash flows, meanwhile, improved from $138 million to $160 million in 2024. For the fourth quarter, revenue improved by 18%, increasing from $48 million to $57 million, which is despite the realized price of gold jumping 34% from $19.81 an ounce to $26.56 an ounce. The price of silver comparatively improved 29%, from $23.74 to $30.66 an ounce. Gross profits for the fourth quarter improved from $35 million last year to $45 million in Q4 2024, which led to net earnings of $7 million, as compared to a net loss of $51 million in the fourth quarter of last year. On an adjusted basis, the fourth quarter posted net earnings of $30 million, or 16 cents per share, versus $22 million, or 12 cents per share last year. Osisko ended the year with a cash balance of $59 million, after net repayments of $50 million over the course of 2024. Debt outstanding as of year-end sat at $94 million. Quarterly dividends throughout the year, meanwhile, totaled 25.5 cents per common share, an increase from 23.5 cents per share in 2023. As we mentioned previously, production was down materially in 2024 when compared to the prior year. Production totaled 81,000 gold equivalent ounces, a 14% decline from the 94,000 ounces of production recorded in 2023. This decline is despite Osisko receiving their first deliveries from a number of different royalties and streams, including the delivery of its first copper from MAC Copper Limited, the first payment received from G Mining Ventures' Token Tinzino project, and the first payment from Agnico Eagle's Akasaba West project. Guidance had called for production of between 82 to 92,000 gold equivalent ounces for 2024 at a cash margin of 97%. Cash margins for the year, however, came in at 96.5%, meaning the company failed to hit both guidance metrics. Guidance, however, was plagued by the loss of the 5% royalty on Victoria Gold's Eagle Gold Mine, following the collapse of their heap leach pad last June. 2024 also saw Osisko acquire 3 new revenue sources after deploying $288 million in capital. This includes a 6% gold stream on Sol Gold's Cascabel copper gold project in Ecuador that was acquired for $225 million. Also, a 1.8% gross revenue royalty on Spartan Resources' Dalgaranga gold project in Western Australia for $50 million, and an amendment to the Gibraltar silver stream that increases the attributable silver percentage to 100% while extending the step-down delivery threshold for $12.7 million. With the loss of Victoria Gold's royalty, Osisko is facing a lower production profile as they head into 2025. Guidance this year is calling for gold equivalent ounce production of 80 to 88,000 at an average cash margin of 97%, which on a midpoint basis is higher than 2024's production levels, but is still below the guidance that was issued for 2024. The guidance assumes that the Namdini mine, operated by Cardinal Namdini Mining Limited, will come online in the second half of the year, and the continued production from multiple assets within its portfolio. Looking further out, Osisko is expecting to hit 110 to 125,000 ounces of gold equivalent production by 2029, which is a notable drop from guidance last year that suggested production would be between 120 to 135,000 equivalent ounces by 2028. This long-term outlook assumes production will come online from projects operated by Goldfields in South 32 and increase production from certain other assets in their portfolio. All right, so let's wrap it up. While Osisko did post record revenue figures for 2024, the results were expected to be better. But after the loss of a royalty that was unexpected due to factors outside of their control, what can they really do? As a royalty owner, it's kind of out of your control. But that's the risk the high margin business entails. All right, everybody, thanks for watching. If you got other royalty names you want us to cover, let me know in the comments section. Also, if you have any thoughts on Osisko, let us know. Thanks for watching, everyone.